GST stands for Goods and Services Tax. It is an indirect tax that is levied on the supply of goods and services in India. It was introduced on July 1, 2017, and has replaced a number of other indirect taxes, such as excise duty, service tax, value-added tax, VAT, and octroi. GST is a destination-based tax, which means that it is levied at the point of consumption. This is in contrast to the previous system, where taxes were levied at the point of production or sale. The GST is a single tax, which means that there is no need to pay multiple taxes on the same goods or services. The GST is a complex tax, and there are a number of different rates that apply to different goods and services. The rates are based on the nature of the goods or services, the value of the transaction, and the state in which the goods or services are supplied. The GST is administered by the Central Board of Excise and Customs, CBEC. Businesses that are registered under the GST are required to file returns with the CBEC on a monthly or quarterly basis. The GST is expected to have a number of benefits for the Indian economy. It is expected to simplify the tax system, reduce compliance costs, and boost economic growth. Here are some of the key benefits of GST. 1. Simplified tax system. GST is a single tax that replaces a number of other indirect taxes. 1. This will simplify the tax system for businesses and consumers. 2. Reduced compliance costs. GST will reduce the compliance costs for businesses. 2. This is because businesses will only need to file one return with the government, instead of multiple returns for different taxes. 3. Boosted economic growth. GST is expected to boost economic growth by making it easier for businesses to operate in India. 3. This is because GST will reduce the cost of doing business and make it easier for businesses to access markets. The GST is a major reform of the Indian tax system. It is expected to have a number of benefits for the Indian economy. What are the components of GST? There are three taxes applicable under this system: CGST, SGST, and IGST. 1. CGST. It is the tax collected by the central government on an intrastate sale, e.g., a transaction happening within Maharashtra. 2. SGST. It is the tax collected by the state government on an intrastate sale, e.g., a transaction happening within Maharashtra. 3. IGST. It is a tax collected by the central government for an interstate sale, e.g., Maharashtra to Tamil Nadu. History of GST. The Goods and Services Tax went into effect in India on July 1, 2017. But the process of putting in place the new tax system started a long time ago. A committee was formed in 2000 by Atal Bihari Vajpayee, who was India's Prime Minister at the time, to write the GST law. A task force determined in 2004 that the new tax structure should be implemented in order to improve the current tax system. The Finance Minister recommended the implementation of the GST on April 1, 2010, and the Constitution Amendment Bill was passed in 2011 to make this possible. The Standing Committee began debating GST in 2012 and presented its report on GST 1 year later. Arun Jaitley, the country's then new finance minister, reintroduced the GST bill in 2014, and the Lok Sabha approved it in 2015. However, because the law did not pass the Rajya Sabha, its implementation was postponed. In 2016, the GST was implemented, and both houses of Congress approved the revised model GST statute. In addition, the Indian President approved 4 additional GST bills were passed by the Lok Sabha in 2017 and were subsequently approved by the Cabinet. Following the passage of 4 additional GST bills by the Rajya Sabha, the new tax system went into effect on July 1, 2017.